I don't know if I'm going to be attacked by a coyote in the background, but I'm here. Well,
You-
take two. Welcome to another episode, TFT, Between Dollars to Dreams, the airplane again. What is going on?
I
Every
know.
time we're recording, there's always a
Outside.
flight going on. But we're happy to be here with you on another episode today. A newsworthy day. It's National Day of Truth and Reconciliation. That's why my friend is wearing an orange shirt.
Where's your orange?
I misled you. But why are you wearing a U.S. shirt and you don't go to the U.S.?
My wife graduated
Ah.
from University of Illinois.
At least somebody in the
You know,
family graduated. So that's a good thing. Welcome. So news, let's talk about what's happening with the stock market based on what we saw yesterday. That is Monday. We're seeing the markets continue to go in one direction, and that is up. And that's what we like to see. But as I was telling you earlier, that I'm not sure about when am I going to get an opportunity to buy a little bit more. If there's no correction, then I might be missing out. So we can't time it really.
Well, that's the whole thing, right? So people
Yeah.
always talk about buying on the dip. You shouldn't worry about that,
Yeah,
right?
yeah.
You always ask me, what's the right time to buy? You know, it was yesterday, right? So let's buy. We see that the market has reached its peak. Well, guess what? When
Yeah.
we talk next year, we'll see probably
New
another
peaks.
peak.
Yeah.
And in the year after that, another peak.
Right.
So don't worry about that. You may have missed the boat. You haven't missed the boat.
Yeah.
There's still plenty of time to get into the market and ride it, especially if you've got a longer time horizon, let's say 10 to 15 years.
Right. And of course, we're seeing like all sectors moving in a positive direction. Oil might be the one that's just holding back, but we see gold continue to increase. We're seeing commodities. We're seeing, even though tech had a sell-off, there's still like Nvidia, they're still going. And this is where we like to people understand about the high quality stocks, that they're always gonna, over a 10-year period, they're always gonna move in a positive direction most of the time. I shouldn't use the word always.
Always.
but
I was
most
going to
of-
stop you there, but yeah.
But most of the time,
Right.
they do get into that positive direction. So trust your long-term goals, and should work for you.
The reality, it's based on your risk tolerance.
Yeah.
Right. So a lot of people talk to us about what's the best investment to buy. Really, it depends on you. What's your risk tolerance? If you're like my mom, spoke to her yesterday, then her best investment is GICs.
Yeah.
Money market, right? Forget Nvidia, forget the stock, forget
Tesla.
the Tesla and all that.
Yeah.
Gives her peace of mind to know that, you know what, in 3-5 years she'll have this amount of money left. But for most, if you have, if you're conservative or balanced, diversifying and being into the market, is still a fairly good bet. But there will be risk involved. The market doesn't go straight up.
Yeah.
It goes kind of up
In
and
waves.
down. Yeah.
And also, speaking of ups and downs, we're seeing that jobs continue to be laid off, and now we're seeing maybe the possibility of Starbucks disappearing from.
well,
not
I
disappearing,
don't know
but
about disappearing, but we've seen some closures. But
Yeah.
I could have told you that. I mean,
Yeah.
you're more of a Starbucks type of guy. I'm a blue collar, right? That you're Tim Hortons kind of
the
guy.
lies, the lies.
So I could see it. I mean, with inflation being where it's at,
Yeah.
Going out and having a $5 coffee, or spending $20 when everything else is going up except your income at the same rate. So people are taking a look closely at their expenses, and they're saying, you know what, I could do without that daily Starbucks, and what could I replace it with? Maybe home brewed coffee, right? And maybe every once a
A
week,
cheaper alternative.
right? Well, once a week, kind of treat yourself, and instead of going on a daily basis. So it is impacting their bottom line as a result of that.
Sticking with inflation, some analysts are calling for another rate cut in order to combat inflation. Do you think that's likely for 2025?
Oh, definitely. It's kind of priced in. I kind of see the market kind of price it in. I do expect another 25% in Canada and also
US.
in the US. And as a result of that, if you're on the fence to buying your first home, it might make your mortgage payment that much lower and maybe more affordable. So looking for good things as a result.
Looking at the housing market, I did see a news item. I think said that younger people are getting into the market, but what the younger people are doing, they're delaying their purchases at least for a year just because of market uncertainties. They're expecting that the house prices will continue to fall for another year, and that's why some of them are delaying. I think when I read 37% of younger people will have the 20%, so they will avoid the mortgage insurance, but the remaining percentage will most likely, based on the survey carried out by Royal LePage.
LePage, yep.
They said that majority will go below that 20%, so they will have to get that mortgage insurance. So the housing market uncertain, inflation uncertain as well.
Yeah.
So
I mean, the main reason about the market, the housing market being uncertain, because for most Canadians, you and I, it's going to be the biggest investment that we'll ever do in our lifetime. So you've got to be safe and secure. You got to feel positive about the fact that you're going to have a job for the next 5, 10, 15 years. If you're not so certain, you're going to stay on the sideline until that certainty comes into place. And there's so many balls in the air, so much uncertainty, tariffs, the unemployment, the economy, inflation, everything. So people are kind of staying on the side. The good thing is that they're saving.
Yeah.
They're putting money aside.
So that leaves us to our final news item. Persons are saying we're a month away, just more than a month away from the budget on November 4th. What do you see the main headlines for the budget?
Massive deficit.
Massive deficits. We continue to increase our deficit.
That's right.
That is to tackle the tariffs, I guess. So tariffs is going to be a main headline for our budget, I believe, and I think they're going to want to ignite the markets. Ignite the economy rather. Even though we did see GDP growth in July,
so
they're expecting a drawback in August. So by the time we get to the budget in November, we'll have to see something to deal with the tariffs that are about to take effect, as we said, around this time of the year.
I mean, I don't envy Mark Carney in the position that he is, because he's trying to stimulate the economy, right? And hopefully lowering interest rates will kind of do that. And then second, he's looking at the potential drawbacks that the tariffs are going to cause. So he's got to have some money aside to able to stimulate or help the various industries that the tariffs are going to impact. So increased spending is going to go up. Well, increased spending is not necessarily a good thing for the economy. So we'll wait and see. All of this, unfortunately, brings uncertainty, and that's why a lot of people are on the sideline. But having said that, being on the sideline is not necessarily a bad thing, but still be invested into the market. Just means as you're buying on a weekly, bi-weekly basis, you're buying more, even though the markets are down. So in the long term, hopefully you'll be able to ride that upward.
So we had a plane to start the episode, and we'll have another plane to end the episode.
But that's what happens when you bring me outside, out of my elements. Right?
But it's good to be outside. We're enjoying the fall weather. It's our fall series. We'll continue to bring you more episodes. And of course, like, subscribe, share, put your questions there. We'll have answers for you. We'll try to answer them in our new episodes following this, of course. So continue to follow us. This is where we get to break down the news and make the complicated news uncomplicated for you. That's it for us for today. We'll catch you on the next one.